This is the Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are watching and listening to the Financial Survival Network. I'm Kerry Lutz. Today's April 6th, 2021. Well, gold hit its low. It was in the 1670s, instantly bounced back, started going higher, and then tested that low again, forming the so-called W pattern, which is believed to be among the strongest and most bullish patterns on the upside that any security or commodity can have. What do you think? Has gold seen its low? Are we headed higher now? My personal opinion is in the affirmative, but send us your emails to kl@kerrylutz.com. Right now, our good friend Craig Hemke is with us, tfmetalsreport.com. Make sure you go sign up there. Craig, so what of gold? You know, we talked about the floor in pre-call, the physical floor. Did we hit it this time?
Yeah, maybe. It's certainly no shortage of physical demand for either gold or silver. We had the silver squeeze movement a couple of months ago that cleaned out all the retail supply and a lot of the wholesale supply too. And we still haven't been able to replenish that because silver is such a tight flow of metal from year to year, month to month. And gold too. I mean, gosh, the latest Indian numbers were like mind-blowing, the amount of gold demand into India. And certainly we've seen that at the mint level as well. So yeah, there's a point at which, even within this current system, that physical demand kind of outweighs what the banks can do with the paper price. You know, the banks can sit there and create the contracts and manipulate the price and fool around profiting from wrong footing the specs. And they do, and they have done so for years and decades. But then you get to a point where if you're going to keep legitimacy to your system, you can't let the price diverge too far away from what's going on in the physical market. You mentioned this physical floor. Remember, we used to talk about that back in 14 and 15. You know, they drove silver down to 14 on multiple occasions and could never take it any lower than that. And gold down around 1100 to 1150 was the same way. And we saw it again last year. In the reaction to when all the COVID shutdown started, how they took silver to like 12 on COMEX, but you couldn't buy it for 12. And people call it, where can I get this $12 silver? That's what it says the price is on CNBC. Well, guess what? It couldn't have it for less than 24. And so there's kind of this bridge that they try to gap in trying to maintain their credibility. And that's where the physical demand finally kicks in. So that's one part of it. There's probably a physical floor here that beyond which they can't drive price, because then they just drive up physical demand even further and the gap widens. There's a lot of technical reasons that price has bottomed here. We can talk about that. There are a lot of fundamental, let's call it inputs, that help us as well. We picked up, I think it was a week ago today on my site, we noticed that the dollar index had risen almost 3% in a month. And by its momentum indicator, which is called a relative strength index, had gotten to a level overbought to an extreme we hadn't seen in over a year. But the dollar looked like it was ripe for a pullback. And in the last 5 days, it has. The bond market looked like it had kind of double topped in terms of the rate on the 10-year note. That has played out as well. And all that is conspired to kind of lift gold off of this pretty solid floor at 1680, as you mentioned. At some point, then you begin to interact with downtrend lines that go back all the way to last summer that have been enforced and have kept price going lower and lower. But here's the thing with trends, Kerry. I mean, none of them go on forever. You know, outside of some dog crap stock that goes to zero, nothing goes to zero on a downtrend, and nothing goes to infinity on an uptrend. Okay, and so that's kind of where we are. Now we're breaking some of those downtrend lines and the thing begins ultimately maybe to start feeding on itself. So that's what we're hoping for.
All right. Well, it's definitely interesting times happening there. And it makes you wonder when you see these kind of movements exactly what's going on. But certainly when it broke 1700, stayed there for a couple of days, came back up, and then went back down, retested. That was pretty impressive move there.
Yeah.
And there's a lot of power in that formation. It's one of the classic chart formation. And so you talk about the divergence, at which point they can't drive it lower. If that physical floor didn't exist, we'd still have $200 gold from the 2000s, right?
Right.
So,
right. That's just it. You can't, from a banker's perspective, the banks that make the markets and monopolize the paper markets in New York and in London, they also have to flow metal at that price, right? So if price is discovered to be, by trading derivatives to be $1,000 an ounce, people are going to show up in New York and London and elsewhere wanting to buy it at $1,000 an ounce. Well, if you can't source it at $1,000 an ounce, well, then the whole system begins to blow up. And you can't really even have price bifurcate that much like it did last year between $12 silver on COMEX and $24 silver at the retail level, because that's when people start asking questions. Wait, hold on just a minute. It says here on CNBC it's 12, but I go online and it's 24. So I think it's actually 24, not 12. Well, you can't have your mechanism called into question that way either. So that's why ultimately it matters. It doesn't matter on a day-to-day basis, that supply stuff, but on a longer term basis, it does. The other thing about price at this moment that's interesting, Kerry, is in my experience of doing this for over a decade now, it's amazing how price levels that go back more than a year, several years sometimes, come back into play as either resistance or support. I remember for a long time in 2010 and into early 11, 1320 was a key level in gold. As price came back down, it became support. And then for 5 years, 1320 became, it was remarkable how that works. So to relate that to present day, a year ago at this time, after we came rallying out of QE to infinity and all that stuff, gold kind of chopped sideways for about 100 days, April into June, between a $100 range of 1680 on the downside and 1780 on the upside. Finally broke out from 1780, went to new all-time highs, went to 2080, as we all know, a couple months later. So, all right, here comes price down in a consolidation, breaks down a couple different times, tries to break out, doesn't pull it off. Well, guess what? It bottomed at what level in late November? 1780. What had been resistance is now support. And then it came back down again to 1780 in late February, thinking, hey, man, we got a double bottom here. Well, we didn't. We washed out. Once we broke through 1780 on my site, we started talking about, well, it's only logical to think now we're probably going to go all the way to 1680. That's exactly what happened. And as you mentioned, we bounced twice now, maybe a double bottom off of 1680. So now on the way back up, what level do you think we should be watching most closely? 1780, right?
1780 is the next milestone.
Huh? Yeah. And there are a number of different indicators on the long-term charts that suggest 1780 is a really, really important level as well. So we're back here now, 1740, 45, above the midpoint of that range. I think a 1780, the first test at least, is probably coming in the days ahead. And then we'll see where we go from there. And once you start breaking out, so this is a beautiful thing about these charts. That's what the value is sometimes of technical analysis, is that if everybody's looking at the same levels, it becomes kind of self-fulfilling. Yeah. It's like we all see that old double bottom at 1780. We all know it was resistance and then became support and all that stuff. And then we all see it move back above 1780. We all at the same time go, yeah, time to get back in. And the thing kind of builds on itself. So that's what we'll be watching.
So what do you do here? If you're a trader, all these numbers mean one thing, but if you're a normal person who knows that you're not going to make your fortune trading, it's something totally different, doesn't it?
Right. I'll tell you what you do. You don't trade. Right? I mentioned a minute ago, it's the banks. And these are not nice people. These bank traders and, the precious metals desk at JP Morgan and the like. They're not they're not these altruistic, benevolent, oh, we don't take a directional position trader. BS.
Yeah.
I mean, they make great money. I mean, what JP Morgan paid $920 million in fines for manipulating the precious metals, but they make $1 billion a year trading them.
And they keep paying these fines. These fines are the equivalent of you parking by a fire hydrant right in the middle of a fire. And, then you get the ticket and you say, you know what? It's just the cost of doing business. I'll pay the fine and I'll move on to the next time that I got to stop and I'll pay the fine again.
Right.
There's no repentance here. If we believe that you can repent your sins and lead an exemplary life, well, these guys have never even crossed their mind. They're just paying the ticket and moving on to the next time they get caught. How many times have they been caught, Craig? How many times? But of course, there's no conspiracy, and they're just doing God's work, right?
Right. And Kerry, we'll continue with the metaphors in this case. But the COMEX is like a casino, but it's worse than going out to Mandalay Bay or MGM Grand, where at least, you feel like you got a shot. If you can get consistently lucky, the only way you're going to make money trading the precious metals is if you really get on the right side of the trade and you make a pile of money at one time to make up for all the little cuts and slices that they take out of you over time, because you can't beat them. I mean, how can you beat any monopolistically controlled game? You can't, at least on a consistent basis. So what you need to do is recognize the larger trend. Okay, what I do at TF Metals Report, we don't give trading advice. I'm not in a position to be able to do that anyway. We talk about the macro trend. We talk about, for example, is price bottoming here or is it not? Because if you think it is, and you think you're going to be buying 100 ounces of silver this month, well, maybe you might not want to wait, because if it's $25.50 today, it might be $26.50 a week, a week or a month from now, and then that costs you an extra $100. So maybe we can save you some money on that end, because really, like I said, trading's a losing game. But if you can understand the bigger, more broad macro picture, which you and I discuss, I've been talking about now for years, then you understand the value of steadily acquiring physical precious metal as a diversification and as protection against, all the other madness that we see in Washington and everywhere else around the world.
Yeah, I know exactly what you mean. It's a mad world. We were talking about Washington, and I mentioned it's just become the wish fulfillment capital of the universe.
Way to put it.
If you have an absurd wish, if you have a wish, no matter how absurd it might be, no matter how off the wall, no matter how economically unfeasible, no matter how destructive to the economy and the country and the world at large, all you got to do is present it to Washington, because now that we are in the throes of modern monetary theory, there's nothing, there are no limitations on anything. So if you just decided, and this I've never heard, is we're going to pay off everybody's mortgage. Everybody's got one, whether they need it or not. You probably could get people to support that. You probably get it through, and you probably get it signed by the president as well.
Right.
Who could think that's bad, right?
Right. Like the student loan debt thing, where Biden thinks he can just, in a stroke of a pen, write off $50,000 a head. The issue with all of this, and this is where it begins to get unraveled. I know you're familiar with the writings of Tocqueville, right?
Of course, yeah.
And he wandered around the early U.S. and he said, this is fine until the majority realizes they can vote themselves the largesse, right? And that's what happened, especially if you notice in that special election down in Georgia in early January. In the end, it became a referendum on who was going to vote to give you another check, right?
Yeah, that's it.
And that's what they ran it on, and the Democrats won, and lo and behold, here comes a $600 check and that stimulus that Trump signed before he left office. So now that precedent has been set. Hey, I want your vote, so here's another check. Or we want to make sure we always get your vote. So we're going to now move you on to some type of universal basic income. And there's no consequence in the short term of this because Stephanie Kelton assures us that modern monetary theory is great. As long as your central bank owns all your debt, there's no harm. Everything's just hunky-dory and dandy. And so you get this perpetuation now of not that they haven't in the forever, politicians buying your vote, but now this nationalization of all of these social programs is only going to get worse. And again, look, that doesn't mean the system's going to fail tomorrow. I mean, I can't believe, we made it out of 2010 for crying out loud. But what it does mean is there's never going to be any attempt to fix the current system. The current system will just go until it just
vaporize.
We don't know when that's going to be, but I just know that the math suggests that poof is coming. And so we got to prepare for that.
Hey, it's just like at the point we are in our lives, that we've got a lot more days behind us than we have ahead. That's just the reality. And that's the reality of our economic system. When you were talking about Tocqueville, it just reminded me of H.L. Mencken's refrain about elections, that they're auctions of goods yet to be stolen. I mean, that's it.
That's a good one too.
Yeah, it's what it's all about, Craig.
Yet to be stolen. I like it.
Yeah, and a lot of wisdom in H.L. Mencken. And he says, in every man's life, you come to the conclusion that the government is composed of complete criminals and there is absolutely no hope of changing it whatsoever. I know my father felt that way. My grandfather felt that way. I'm sure his father's father felt that way as well. And it just goes back through the generations. You know what? Government is something you succeed in spite of. Unless you're in this circle, then all of your success, like the Hunter Biden syndrome, is all based upon favors you can exact and gaming the system to your benefit. But otherwise, your success is going to happen because in spite of the government, not because of it. And that's what you always need to know. Hey, so tfmetalsreport.com. What do we got there? You raised your prices, I hope? So? You're like giving it away there, Craig.
Yeah, no, we did last summer, and we're good for a while. It's $15 a month, so it's not a deal breaker. I hope for most folks.
Free lattes, like at Starbucks.
And if I can stay on top of things in the direction of price, we've been doing a pretty good job for the last couple of years. Actually, for a number of years, I wouldn't still be in business after 11 years of doing this if we didn't do at least a reasonably good job. If you're a silver investor or a gold investor and you're doing it, buying metal on a regular basis, and, even if it's just 20 ounces, if I can pick a time, if I can help you find a time, let's put it that way, through my analysis that maybe saves you $1, well, that saves you $20, more than recaps the $15. So it's $15 a month, but you get my analysis every day and you get the access to the community, which is far more valuable, frankly. And we have a lot of fun there, and try not to take it too seriously, because otherwise, man, these people, Kerry, I've already aged like 30 years in gold years over the last 10. I mean, I don't even know what kind of shape I'd be in if I took it so seriously, like everybody does. Oh, yes, well, you have to be professional, We're going to try to get through this best we can because we're all in the same boat. So, hey, I know in the past I've offered a coupon code on your show, so I'll do that. Let's do that again. Just go to my site. You sign up for a monthly subscription, $15 a month. But at checkout, if you add the coupon code Lutz, LUTZ, we'll give you 50% off your first month, save you $7.50, and give you a chance to kick the tires. But listen, it's a great time to be in the precious metals. Obviously, I mean, we've had this really long correction that's lasted longer than I thought it would. The last couple of years, the correction have just simply lasted from August into December, and now here we've gone on into March. But the macro conditions of capped interest rates, rising inflation, profligate spending, all these things will promote higher prices regardless of the ongoing manipulation. So you got to make sure you get some metal while you can.
Yeah, I couldn't agree with you more. And we both recommend highly Miles Franklin.
Yeah.
Andy Schechtman over there. It's the only place where I buy my metals for us. So just a plug for him. Make sure you tell him that Craig and Kerry sent you.
Do it.
So you both get a little gelt under the Christmas tree. If that's not
How do you get that? I just know, as you know, the Schechtman's been in business for decades, and they're good people.
Yeah.
Honestly.
Absolutely. No, they're personal friends. And before they were friends, I was still buying metal from them. So
There you go.
there's no other place I would go. But we'll leave it at that. But if you got any questions or comments for Craig, as always, send me an email personally. My personal email address is kl@kerrylutz.com. And don't forget to sign up for the financialsurvivalnetwork.com and get your free newsletter. I'm going to do a couple of reports. I got to do one. We didn't talk much on cryptos, Craig. The world has gone gaga over cryptos. I see it as a way, perhaps, of supporting future silver and gold purchases. If you get into those cryptos, they go up, take some money from it and buy metals, because there will never be a shortage of cryptocurrencies, maybe specific ones, but that's like saying there'll be a shortage of mining shares out of Vancouver. But there's always a shortage of quality mining companies coming out of Vancouver, and we like to think that we work with the best. So in any event, just shoot out the email, and it's financialsurvivalnetwork.com. Craig, we'll talk to you again real soon. Be well, my friend.
Thank you. All the best.
Now more than ever, the Financial Survival Network.